Sarah Snell Cooke, your host here at the Credit Union Connection. I'm here today with Charles Shanley. Welcome.
Hello. Hi, Sarah. How you doing?
Peachy, how are you?
Great.
Charles has been a long time credit union executive recruiting person, and so tell us a little bit more about Shanley Search Partners and yourself.
Sure. Yeah, well, I've been around for well over 25 years, specializing in really mostly C-level placement for credit unions, a little bit of banking, a little bit of fintech, those bad words, yeah, I started out working for a competitor, and then I was 20 somewhat years ago. Then I built a search practice from scratch ran that for about 15 years, and then brought it out into a standalone company several years ago now. And so, like I said, we specialize mostly in C-level placement. We do a lot of CEO searches, anything really in that C-level area. But if it's a good client, we will dabble really in anything. But right now it's mostly credit union CEO searches. I think we got some fintech things going on, but really exciting time for new leaders out there in the industry.
Absolutely, and that's one of the things we want to focus on today is leadership development. That's one of the reasons we started the Credit Connection is to help figure out, identify, and train up the leaders for tomorrow, because that is the reason that some of these credit unions are merging away. Um, so, first question for you, sir, is obviously this process starts with the board and who they're looking for. Who are they looking for? What are I'm sure that's evolved a lot since you started 25 years ago, but yeah, what are modern boards looking for in their next CEO?
Sure. And it has changed a little bit. We went on site. We just filled a couple of CEO searches in the past week. And actually, we were on site for kicking off a new CEO search last week. There are certain competencies that most boards look for. And a lot of times we have to help them with that. We were on site for probably 2 days, just talking to as many individuals and employees at the credit union as we can, just to try to understand what the culture is and what's going to work there, what's not going to work there. And so some boards they're disconnected from culture because they're not supposed to be in the weeds and the daily operations. And so in this case last week they were a little shocked that they heard about there's some issues going on with culture. So a lot of times we're looking for that cultural fit, but oftentimes it's maybe a culture builder, or someone that has, let's say, transformative leadership, someone that's adaptable. And in this case, that's exactly what's going to be needed here. They had some prior authoritative leadership in there a couple of years ago, and you don't see that as much in the industry, but it does exist. And so it's been 2 years since that person had left, but still some of the damage that has been done from that leadership, this on the morale, the credit union, there's silos everywhere. And so in their case, it's going to take somebody that can really kind of lead the charge of getting back to getting the morale up and what's next. Taking them and showing some real vision on what's next for them.
Mhm.
But other than culture and leadership itself in general, we're looking for the overall experience is important, but someone that's probably really passionate about the industry, especially credit union industry.
Right.
We do like our boards to keep it open to community banking, even the fintech industry. But most of the time, when we make a final presentation, you're looking at credit union executives. But
Hmm.
we're looking for relationship builders. We're looking for individuals that have emotional intelligence. We're looking for people that are results driven. Be prepared to talk about your success stories. How maybe you've introduced a new product or made something better, or you've taken your vision into reality. We're going to want to hear about those things. But those are some of the general areas. But there's a lot of things you can do to help prepare yourself to be a CEO these days. And we met with the Cardwell Leadership Group last week, and we try to meet with all of their graduates from time to time. And it's a great program to go through if you want to be a CEO one day, or if you're a current CEO and just want to try to possess stronger leadership qualities. And so there was probably 20 really just outstanding executives on this video meeting last week, and they're all doing what they can do to become better leaders. And so in that case, we went through our kind of a presentation on what our process is and what they need to do to help better themselves to be a CEO. A lot of it is just you can see you can see it, someone that has aspirations to be a CEO almost immediately on a resume within just a few seconds. They're doing the things that you should be doing. They're making even changes. They're taking on more responsibilities. They're going to Cargill Leadership, or maybe it's the Q CEO Institute, or maybe the Emerging Leaders Program from that exists out there too. So um, so there's just a number of things that you can focus on to enhance that leadership. But I don't want to keep going rambling on. If you had another question, there's a good start for us, anyways.
Yeah. Well, and a lot of the things you're talking about are not things you learn in school, at least not when I went to school anyway, a little bit ago. Um, and yeah, even, 10 years ago, or a little over 10 years ago now, when I finished my MBA, there were no classes, not I don't even remember a mention of some of those softer skills that you're talking about. Relationship building, being able to adjust and shift a culture that may not have been so good with under the previous CEO, things like that. How do you, are those things teachable? I mean, imagine they are, to the right people. But yeah, it definitely seems like a different focus on leadership and
Yeah,
how do
I think anybody could be a great leader,
you,
really. I mean, and certainly the training is going to help you. I don't think I mean, sure, there's probably people that are just born that way, that are born leaders, but you can be taught it. I mean, if you really want to improve and be a great manager, and being leaders is also, there's everybody likes to be. Some people like to be managed different ways, so it's also kind of adapting your management style sometimes to different individuals. So there's a lot of pieces that go into it, but a big part of it is not only just immersing yourself in leadership programs, but it's the networking
Mhm.
that you gain from that. I mean, there's 20 individuals on my screen, and they all know each other because they went through this program together. It's the same thing like at the CEO Institute, and so those relationships that you build are worth gold. I mean, we only survive even in our business. It's a relationship business, so
Sure.
it's a matter of even going out to conferences, getting involved in the industry, getting out in the community, being involved in the community, especially if you're a community chartered credit union. And so
Mhm.
those are the things that we look for in candidates and so it's gonna help you. And even it go as far as building a relationship with a executive search firm. So that we know what your desires are, where you want to go, whether
Mhm.
it's location or asset size, a CEO position, or even a C-level position. Start those relationships, and it's going to pay off for you.
Mhm. And one of the things that I've heard, I don't know if you agree or not, so tell me that first, but is as cranes have grown larger, they have more C-suite, and so there's more lines they're more focused on a line of business versus like a full strategic vision of the credit union as a whole. Is that something you're seeing, and how do we fight that if you agree?
Sure, and yeah, it's just going to naturally happen as you get larger. A great example is they may be a chief risk officer. It's not a C-level position when you're a small credit union, but as you grow, it does become more of a common position. Even like technology, they even have a chief information officer and a chief technology officer. So yeah, we certainly see it. And I don't know if you can avoid that. You need specialized as those roles become so much more strategic. There's just a need for that C-level experience in those areas. When we're conducting a CEO search, there is a pattern that we look for, relative to asset size. And I'll just use maybe $1 billion as an example, $1 billion credit union. And so, we're usually looking for, if we're looking to fill a CEO, we're looking for CEOs that are maybe from smaller organizations that are ready to move up in their career to a larger credit union, or we're looking for C-level that are at larger organizations that are ready to take on the CEO position. And so maybe the advantage for a board of getting that CEO is that they already have CEO experience, that they have the relationship with the board already. They have full accountability for an entire credit union already, but they may not be doing things you're doing because they're a smaller organization. And so when you go to a large organization, let's say I'm using that billion asset range, let's say you pull $2-3 billion candidate that's maybe a chief experience officer, a chief or a COO. Well,
Mhm.
they've been down that road before. They've crossed that $1 billion mark, that 1.5 billion, and so they're doing things that you're not doing yet. And so, but the kind of the trade-off is they may not have CEO experience, so they may not have as much board relations. So usually when we make our presentation, it's a mix of internal candidates, of course, because all internal candidates go through our process, but it could be some current CEOs and C-level candidates from larger organizations. And then sometimes if you get really lucky, it's somebody that's been from a large organization and is now maybe a CEO or has been a CEO before and has gone to a large organization. So it's different every time, but that's how it's pretty common. I think people see that, but that's how it's relatable to the asset size, and so that's a
Hmm.
big part of it too.
Yeah. And one of the things that you haven't talked about is executive compensation.
Oh, we're gonna go there, huh?
Of
Okay.
course we're going there. So that's obviously evolved too over time. And not only that, but there's in particular with credit union boards,
Sure.
because they may come from a particular seg, they don't necessarily,
Oh,
you're
yeah,
looking for a CEO of a financial institution, yet these are teachers making X, you know,
yeah.
probably a third to a quarter or less of what your CEO is going to need to be
Yeah,
competitive.
and so there's always sometimes there's an education that we have to go through with the board of directors, and especially on comp. You know, and a lot of it is because it's teachers based. It's interesting. We just filled a one of the CEO searches we just filled last week was one for unions, and it's they're all their segs are different unions. And so they're much different on compensation based on that. And so it's a good example of how you just have to be adaptable, and listen. And so I wouldn't say it was a challenge, but understanding how their pay structure is too. It's all through the union. Even they have like vacation pay that's different. But they do have things like sometimes they have pensions in there, and so which are still a form of SERP, a supplemental executive retirement plan. So it can be different every time. It's about understanding the client, too as well. But if it's and you can look at, like, you use teachers, you can use a base and pull data from other teacher-based credit unions. So you
Mm,
can start to narrow the data down a little bit. But at the end of the day, if you really want a strong CEO, you're going to have to pay in market. And there's a low and a mid range. You got to be in it. You have to be in the low or the mid range. Sometimes no, most credits don't pay above midpoint, but yeah. And so there's especially if you have a long-term CEO in place and you're going through a search. I mean, there can be some sticker shock. They just, or especially if it's been maybe an internal candidate, they've got the position and they're in that role, and so they don't push for raises through the years. And then when it comes to and they've just been growing through those years, and then when the board compares what the market is compared to what that current CEO is making, and it can be a problem, and we go through that quite a bit. It's very, very common. And it's we have every survey out there. We have our own data that's more accurate than survey data, and so we work with those boards to educate them on what it's going to take. And that's early on. That's like
mm,
that's the very beginning of the process, because we have to make sure that we at least have come to some agreement, because at the end of the day you do get what you pay for. And so but there is a range, and we don't like to give candidates ranges technically, because then you always want the high end of the range. But some states you have to post those ranges regardless inside the position announcement. But we want to make sure that the candidates' expectations are realistic,
mm,
and that the board expectations are also realistic, and we try to make it a fair offer on both ends. But especially in the world of SERPs, you run into some situations where yeah, maybe the board hasn't gone down that road with the SERP before. If you're 500 million above credit union, you're doing probably a SERP, so you already have a SERP probably with your CEO. But and so there can be some education on that. We recommend there's a couple good companies that do a good job at SERPs, and we will throw their name in there for education purposes for them to talk to and just get as much information as you can. I know Gallagher does a really good job. Ernest Consulting Group does a really good job. There's some free plugs for them, I guess, but
mm,
but they do a fair job at offering different options for them. And so yeah, and there's split dollar insurance plans usually are more common these days, but and so it can be an education for the boards sometimes, but it's very, very common these days to have those parts of compensation included. And so we don't do SERPs ourselves. I think it's a conflict of interest is why we more recommend companies that do a good job. But yeah, it's make sure that you're in market for base, and even an incentive based comp, and that's a whole other topic on how you build that. What I call a balanced scorecard. It's what are the components that build up that incentive based comp. And of course, there's going to be, the financial metrics, your ROA and your capital ratios, which is great. But if your financial metrics are the only things in your bonus incentive, then the CEO will manage just to those metrics.
Yeah.
And so
Yes.
you have to have a balance of non-financial metrics in there. NPS, Net Promoter Score, and so that's a great example. It's in customer member satisfaction, and also maybe employee satisfaction in there as some other metrics to help balance out those financial ratios. So it's you got to think about all those different components of it. And a lot of times when you're starting a new CEO, you don't necessarily have it all lined out either. Even in our offer letters, it's a percentage base up to this amount, and then it's to be determined with the board and with the CEO input, because you want the CEO to be a part of those discussions on what the goals are, but how realistic they are too as well. So setting those goals together with the CEO and the board is what needs to be done to make sure they're because you want some of this BHAG, there's big, hairy, audacious goals in there too, but you also have some different points where you're hitting the mark and you want to have incentives based on those as well. So yeah, I think that's a lot of talk on compensation. It's been changing a lot through the years, but I think it's just we have to listen to our clients on that and see where what's going on, and then just be supportive of them and providing the data that's for the market.
Mhm.
And that's you're going to get there eventually. I mean, the data is what the data is. And so but we can show them candidates at this range and candidates at this range, and there's going to be a difference. And then of course you have your internal candidates too. An internal candidate, if they're selected, you don't just give them a bump from where they're at. You have to pay market, although it may be a large chunk that they're moving into as they're moving into the CEO role, but you have to still pay market. And so a lot of boards think sometimes boards will, well, I'll just go the cheaper option maybe and you go over our internal just because we think we can pay them less. Well, that's not how it works. You still have to pay the market and you have to pay that internal candidate of what the range is and pay market. So that's part of the education too, through boards if they don't believe that already. So it's a lot going on. It's just a touch of that compensation topic. But I probably answered your question on that, I think. Yeah.
Yeah,
Okay.
absolutely. And from the other side, though, as the prospective CEO, say you haven't been a CEO before, or what do they need to know that they want to ask for as part of their comp package?
That's a good question because surveys are for current CEOs, and so they may be pulling their own data and they say, okay, here's midpoint, and here's what it is. I should be making midpoint. Well, that midpoint is actually for that's a CEO right there is that making that midpoint, and so you may not be making midpoint if you're not CEO because you still have to prove yourself as a CEO. Now it's a little bit different. If you are a CEO that's from a small organization, you're moving into a larger credit union, then you have more of a case to get to that midpoint. But so there can be you can be a little lower than that that midpoint range or wherever they're saying their midpoint or where they really want to fall into that range just because you're not a CEO just yet. And because that's and so there are things you can do even in those situations. So you can have maybe it's a faster review process. Instead of it's an annual review. Okay, we're going to start you here, but in 6 months we're going to do it. We're going to do a quicker review of you and see how things are moving along. And at that case, we'll give you a bump up from there. So there's in an offer, you never get everything you want. And so but you have to. There's ways to kind of get around certain things, and if it's there's the base, there's incentive, there's car allowances. I mean, there's even the benefit side. Sometimes CEOs are
Sure.
paid the free, their premiums are paid for free. So, we usually have some wiggle room in somewhere, and so we try to focus on what's important to you. And then if we get those things, then the other things are that are not as important, we don't go to battle for those. And so that's the approach I would say for anybody that is going to be looking for an offer from for anything, not just CEO, is what's important to you, and what do you want to get out of this, and then and be realistic,
Mm,
and because there's always another candidate out there, that
yeah.
is I guarantee you when we have a final presentation and the board goes through multiple reviews of candidates and they narrow it down and there's always still a couple two or three in there and if we can't come to an agreement, there's another candidate there that is more realistic on those expectations. So just be
Mhm.
realistic. And I think really, when we're talking about CEOs, if your money is an important motivator, but it's not as important as you think it is when we get down to the line on that. It's really the opportunity itself, and if money is the number one motivator for a candidate, they're really not going to make it through our process.
Right.
Their motivating factors have to be different. They're going to want this position specifically. They're not applying to every CEO position we have. It's just this one, and so we're targeting candidates that are in those markets, and so it is really just this opportunity, and so they're in it for the right reasons. And so when it comes down to an offer, gosh, I can't remember the last time I've had an offer turned down. It's been years, really,
Mhm.
because of the process we have, and then usually it's just education, through with boards and candidates on what realistic expectations are.
Mhm. And as far as like one of the huge things right now is technology, and it probably will be for the rest of our lives and beyond.
Sure.
Um, how much more emphasis are boards putting on that knowledge, not necessarily knowing how to do the stuff, but at least like at a strategic level, the technology knowledge? Because one of the things I've observed, I don't know if it's a trend or not, is I've seen a couple more like CIOs, CTOs become CEOs recently.
Yeah.
So what are your thoughts?
Absolutely, and that is a trend, and 15 years ago, it was pretty tough for those CIOs and CTOs to make that transition straight into a CEO role, and we do see it, and it's great if you have some different background besides just the technology. Really, the most diverse background you have, the better candidate you can be.
Mhm.
But if it's not a CIO or CTO, they are looking for candidates that are tech savvy for sure. You're gonna whether it's the gone through a full digital transformation, online mobile banking, all those systems in place, and even the whole strategy beyond that. We're looking for that. If you're a billion and up, you already have that, for sure. But especially if you're a smaller credit, even smaller credits, we're looking for that. Someone that has gone, is a part of data-driven decision making, and so huge area, especially with the way technology is changing and AI, and I'm not going to get into any of that right now, so they're looking for candidates that are like that are comfortable in that range, But at
Mhm.
the end of the day, you really want to be as well versed in as many areas as you possibly can to be the best candidate you can, and
Mhm.
so technology is just one of those. But but yeah, it's definitely top of mind for what we're looking for. It's a part of we in our process we have questionnaire projects that we do. We have presentations that candidates have to do, and so there's a series of interviews they go through. And technology is involved in all those questions, is involved in all of those projects and interviews, and so you're not going to get around it. We're going to find out about it going through our process.
Yeah, yeah. And so how has it been as far as like the generational shifts? I mean, right now I imagine a lot of the CEO candidates are probably Gen X, and then you also got some older millennials in the mix.
Be
And
careful, I'm Gen X.
I know, well, same here, the forgotten generation. Um, so yeah, so how is it different looking at candidates of different generations? Because I know those generational differences are more generalizations. At the same time,
Yeah.
exists because it's real. The characteristics of the generations exist because it's pretty common.
Yeah, and they're growing up in it, and so really the candidates that are, yeah, I mean a lot of we do a lot of most of our CEO positions are retirements, and there's some that are forced retirements, but and so it's my generation, Gen X and beyond, and so we're not as tech savvy, but it depends, you don't. It doesn't have to be just because of that generation. I mean, there are some CEOs that are, they're really towards the end part of their career, they're very, tech savvy, and
Right.
it's just you have to, and the competency behind that CEO that is that way is they're adaptable. They're adaptable and they see and they embrace change. And so if you're a lot, if you're that type of CEO and you're in an older generation, yeah, heck yeah, that's what we're looking for, and you'll see that those credit unions that they're employed at are very progressive.
Mm-hmm.
And those are, and so if you, and especially when you have, and it also times it depends on your board. Are you a tech board? Or a lot of boards, hate to say it, but a lot of boards have some board members that are aging, no term limits. And so when you have boards like that, they're not, I mean, they may know technology a little bit, but they're not pushing it as hard. So, part of that is at board level, about having some term limits, getting some fresh blood on that board, that is a little more tech savvy and, diversifying the background of the board, bringing some tech in, some technology in there, bringing some CIOs onto that board. So it's the responsibility of that board, I think, too, to have a diverse board that embraces those different areas. And so it all starts there. And then they'll be more acceptable to executives in that area. And it's not bleeding edge, but you got to be maybe leading edge or in the pack.
Mm-hmm.
And so and that's really where we see a lot of the younger candidates really shining on that tech area, coming
Mm-hmm.
through that, even through that digital area, and then coming up through maybe the retail operation side, and then when you look at a COO or a CXO today, before it was maybe just the branches, and maybe they'll throw some lending in there and some marketing, but now it's all the digital delivery, that's under the CXO or the COO, and so those areas are over like the bulk of the organization. They have the most candidates, the most responsibilities reporting up to them, and a lot of times boards pull from that area to be their next CEO because of that. They has the most diverse background, but also that technology is in there, woven in there between under that vertical.
Mm-hmm.
And so yeah, you better be, yeah, everybody we've talked through these leadership groups, high tech, they know about they're involved, and if not, I mean, the attending conferences, so I mentioned networks before, but definitely getting out there and being a part of those conferences where they have those emerging technologies coming out and discussing those things. So
Yeah, yeah, for sure. So, as we're gonna wrap up here, I always
okay.
allow my guests to have final thoughts. Charles, what would you like to leave our credit union audience with?
Yeah, I think maybe just as maybe a summary of what our discussion was about today. I think it's, we're looking for leaders that are potentially transformative leadership. So focusing on being adaptable in the industry, and really building relationships, and that's within your network, that's within the industry, and maybe even with the firm, and being a culture leader, and having even that emotional intelligence. I didn't mention the word collaborative leadership today. So, I mentioned, that authoritative leadership that is fading away, but it's still out there. So the leaders we look for today are collaborative leaders. They're also, they're not all the way to this side people pleasers, because sometimes they don't hold people accountability. So it is a balance of accountability in there too. So you have to be, we're looking for, and that was some of the problems that when we visited with this other organization, is there's a real lack of accountability throughout the organization. So we want leaders that have accountability, and so that results driven leader that has that vision, and they can take that vision to a real plan. And we're going to ask you about, when have you done that? And then so I think it's just being on top of the industry, It's a lot of exciting things right now, and being a part of that is a lot of fun. So that's what I think I'll do today.